Muted.
In 2017, we reached over 1,200 agricultural businesses. To learn more about our loan programs, trainings, and business assistance, please visit www.thecarrotproject.org or email businessassistance@thecarrotproject.org. So a little bit about the webinar today. Through our work with clients over the past decade and a 2-year research project we did a few years back called Measuring Profitability and Success, we found that financial management skills are really crucial for helping farmers to meet their goals, which in turn helps them to continue to sustain the environment and their communities through their work. At the request of farmers, one of the resources we've created to help farmers do so is the financial management calendar we're going to discuss today. And its purpose is to help you manage your farm business more effectively by providing guidelines about why you'd want to do certain financial management tasks, when to do them, what you'll need to do so, and all the steps required. This webinar will be most useful if you can follow along with the calendar document. So if you don't already have that in front of you, please look it up on the front page of our website, www.thecarrotproject.org. There are 2 parts and we'll be discussing them both. I'll also put a URL in the chat window that you can click on. So here to present the tool today is our Senior Business Advisor, Julia Shanks. Julia has worked with the Carrot Project for many years as a business advisor and was part of the research team that first developed this resource. She'll be presenting the calendar tool. A quick housekeeping note, participants are going to be muted throughout to reduce background noise. So if you have questions, feel free to type them into the chat box at any time. Now, here's Julia to talk about the tool.
Hello, and thank you, Kira and the Carrot Project for hosting this webinar. My name is Julia Shanks, and as Kira mentioned, I am a business advisor for the Carrot Project. I am also the author of The Farmer's Office. And before we get started talking about the financial calendar tool, I think we just need to thank Northeast Extension Risk Management Education and the USDA for the grants that supported this webinar and the whole Making It Happen curriculum. Also want to just make a quick disclosure that as we go through the calendar tools, I'll be throwing out some numbers, and they're pretty much made up and they're put together for illustrative purposes only. And obviously, as you plan for your own business, you'll need to make sure that you properly plan and think through your specific business needs. So the agenda for today's webinar, we're going to talk about why bother with this bookkeeping and accounting and how this financial calendar tool will help you. Then we'll go over the calendar tool both in terms of its formatting and concepts, and then we'll review some specific tasks. And of course, at the end, we'll have time for questions. So why bother? I am a big proponent of bookkeeping and accounting. If anybody has listened to any of my webinars, you will know this. And the big reason is that if you want to understand how to earn more profits and how to maximize your profits, you really need to understand your financials. You need to understand your cost of production. You need to understand your sales. And understanding the financials helps you plan for growth and make better decisions. But in order to do all of this, you need systems in which you can track your financials. So, there's a whole host of reasons why you should bother with bookkeeping and financial management. And we certainly drill it down in a lot of the Carrot Project programming. But then what are the mechanics of it? So that is why we have the financial calendar tool. And the goal of this workshop is to help you get systems in place so you can better track your financials and also have an understanding of when and what you should be doing. So this calendar tool is broken out into 2 components, and we'll go through the 2 components in this webinar. So there's the basic checklist of what you need to do and when, and then more details about the different tasks. So we'll go over the layout of the calendar. We'll discuss the operational versus managerial tasks and how to make it work for you. So this is the first part of the financial calendar tool. And just to be clear, this isn't a program, it's a checklist and a resource for you to help you better understand what you need to do and when. And you can see at the top it says part 1, and part 1 is the checklist, and it's a quick snapshot summary of what you need to do. And we recommend that you print it out and put a copy up in your office, in the barn, and somewhere where you can refer to it on a regular basis to keep up with what you need to do and when. You'll see that there's different tasks that you need to do with different frequency. So there are going to be daily tasks, and these are things I would say daily-ish, things that you should be doing every day, every other day, and that really depends on the nature of your business and how many transactions you have going on, whether you need to do it every day versus every other day. In the busy season, you're certainly going to have more things going on, so even though it's busy, you'll probably want to be tracking things with more regularity. Then there are going to be tasks that you want to do on a monthly or quarterly basis. And again, depending on the season and the nature of your business, one of these tasks that we'll be talking about is monitoring your cash flow and comparing your projections to actuals. So, in the busy season, you really need to be on top of your cash flow. Whereas, in the slower seasons where things aren't moving quite as quickly, you don't need to do things with quite as much frequency. And then, of course, annually, year-end review and analysis, so the list of tasks that you need to do then. Further, the tasks are divided up into operational tasks and managerial tasks. And the operational tasks are things that, just need to get done and allow you to do the managerial tasks. As an example, you can't compare projections to actuals if you haven't actually been tracking anything. So an operational task, for example, would be enter in your expenses, whereas a managerial task would be compare your projections to actuals. You'll also see that some of the tasks are a little bit more in depth than others, and they have a number next to them. So, for example, you'll see here, monitor cash balances with a number 1 next to it. And that number 1 refers to the more detailed part 2 of the financial calendar checklist, which you'll see here, and it says part 2, and it has the numbers that go down the left-hand side. You can see that those tasks are what are being referred to on the first page. So on the checklist, you'll see the number 1 right here, and that's referring to task. Part 2, you'll see the detail of what you need to do for each particular task. So, for example, task number 1 is monitoring cash balances, and you'll see what the task is, why you want to do it, what the goal is. You'll have a list of the tools and data needed, as well as the process. So you can see that the steps are laid out in the process, what you need to do, the tools and data, bank balances, amount of uncashed checks, etc., and that the goal of this particular task is to have enough money, have enough cash to pay upcoming bills without bouncing checks, and prioritize expenses as needed. So before you get started with the tool, and I will just say that we are going to go over examples of different tasks that you need to do so you can understand how all of these different things are used in practice. So before you get started, we recommend that you have cash flow projections, and you can go to the Carrot Project's website. We'll send out the slides, I think, at the end of the webinar, so you can follow these hyperlinks, but these are available on the Carrot Project's website. But, for example, if you want to compare your actuals to projections, it also helps to have a system for tracking revenue, your sales, and your expenses. I'm a big fan of QuickBooks. I think it is a great tool. It's a robust tool that you can grow with, and it's a great way to track your revenue, your expenses, your bills, what you owe people, what people owe you. For some smaller farmers, Excel is better. It's not as robust as QuickBooks, but certainly tracking in something is better than no tracking. And I did create a Excel register template on my website that you can use that helps you sort everything. And then it does help to set reminders in your actual calendar. And I'm a big proponent of just making appointments in your calendar, whether it's once a week or once a month, for when you're going to do things. You know, if you leave things till 10 o'clock at night, when, you know, at the end of the day after dinner, you're going to be too tired, you're not going to do anything. So it does help to set a time when it's reasonably expected that you can follow through on your commitment. You know, for me, 5 o'clock is a really good time, 5 o'clock in the afternoon, because I'm sort of winding down from the day. Everything is fresh in my mind, and it's a great way to unload. My brain is sort of on half pilot, you know, around 5 o'clock. So for me, that's actually a great time to just sort of do the basic bookkeeping. But, you know, you may decide that you need a full capacity. So maybe 5 a.m. or 6 a.m. with your cup of coffee in the morning may be a better time for you to set these times in your calendar. So the first task we're going to talk about is how to monitor cash. And this is a weekly or bi-weekly task. And you can see that it's listed under the managerial tasks as opposed to the operational tasks. And it has a number 1 next to it, which means there's more detail about what you need to do on the detailed task list. So here on the detailed task list, we have monitor cash balances. You can see the number 1 right here, which is corresponding to the number 1 on the checklist. And obviously you want to have enough cash in the bank to pay upcoming bills without bouncing any checks. And, you know, part of that, or the corollary to that extension, is that if you bounce checks, you're going to be incurring fees and making your vendors angry at you, and perhaps stifling your capacity to produce if you can't get seeds or other supplies, etc. So what you need for this is your bank balance. So if you're going to monitor your cash balance, obviously it helps to know how much money you have in the bank. You need to have a list of your uncashed checks, your upcoming bills, and anticipated revenue. And it does help to have the complete annual cash flow projections. So how does this process go? So actually, we already talked through what was on the actual checklist, but we're going to now just sort of go through. You can see what's actually on that piece of paper we're going to talk about in more detail here. So the 3 things that you need is your bank balance, the bills that you have due, and anticipated checks coming in, or cash coming in. So first, let's talk about the bank balance. So the first place, obviously, you're going to look is to your online bank balance. You know, if you bank online, you know, it's tempting to also look at your monthly statements, or if you're using QuickBooks, you can look in your QuickBooks software. The challenge of this example, this person's online balance, according to QuickBooks, they downloaded the information from the bank, was $38,000, whereas in QuickBooks, the balance of the checking account is overdrawn by $1,300. So there's always that question of what numbers do you trust? And it's tempting to just go online and say, well, I'm going to look at the bank balance in the online records because that's going to be the most accurate. But it isn't always the case. And I'll give you a couple of examples of that. So you may write a check to one of your vendors for $4,000. You mail the check. It takes 2 or 3 days for the check to get to them. Maybe it sits on their desk, and it takes a couple of days after it sits on their desk by the time it goes to their bank, and then it clears. It can be a full week from the time that you write that check until it clears your bank balance. Your bank has no idea that you wrote that check, and the only way they know that that check was written is when it comes to them. So if you're only trusting your bank balance, you may miss a couple of expenses, a couple of checks that you've written that haven't been cleared. And if you're keeping your records effectively and accurately in QuickBooks, that is often a more trustworthy source of your current bank balance, because QuickBooks knows what checks are still outstanding, and you can have a running tally of what your bank balance would be if all those checks cleared. So I do recommend that you keep a good record in QuickBooks, and if you do look at your bank balance online to know your beginning balance, to take it with a grain of salt and try to keep track of what checks might still be outstanding. The second thing that you need to track your weekly cash flow or monthly cash flow is to know what bills you have due. And it does help to have a special place where you keep all your bills, in your office. If things are organized, it's easy to just have a big pile of papers, but if you have a special place that's just for the bills, it's helpful to know exactly what you owe. Also, if you're entering your bills into QuickBooks, you can check your accounts payable report, and then also, just looking at your calendar. As an example, you don't necessarily get a bill for your rent, but you know that your rent is due on the first of every month. So here's an example of a AP aging summary report. And AP is accounts payable, and it's a summary of all the bills that you have entered into QuickBooks that have not yet been paid. So it's a great way to see what bills you have coming up. And this farmer has about $1,300 in bills that are outstanding. You can see which ones are overdue and which ones are current. So, hopefully you're not overdue too much, if at all, but it can also be helpful to help you prioritize which bills to pay and when. So what you want to do is you want to start with your beginning bank balance, and we talked about, where to get that number. So let's say you have $4,075 in the bank. Currently, you know that you've got $1,300 in bills due this week. You can look to see at the calendar what other payments you have coming up, maybe payroll or your mortgage or your rent. And then you can also note your expected cash inflow. So what money do you expect to come into your business? And if you're going to a farmer's market, you know that you average whatever at every farmer's market, or you can look at your cash flow projections and say, oh, well, I expect to have this cash coming in because I anticipate that 20 people will sign up for my CSA this week. Or you can look at QuickBooks at your accounts receivables to see what money people owe you. So you have your beginning balance, subtract what is due this week with your bills and other payments, and add in your expected cash inflow, and that is your ending cash balance, what's available to you. So in this example, you're looking good. You've got enough money to cover all your bills with both what you already have and what is anticipated, so you're in good shape to pay your bills. Sometimes it doesn't work as well. You can start with the same bank balance, but maybe it's the end of the month and you've got payroll coming up and your rent and your utility bills are all coming up at the end of the week, and it's a big cash outflow week. And in this case, the farmer is going to be overdrawn. If they pay all their bills and other expected payments, they're going to be overdrawn by $561. Obviously, you don't want to overdraw because somebody's check is going to bounce, you're going to incur fees, and it's just really not fun. That you're going to be in an overdrawn cash situation, you need to make some decisions. First of all, figure out, can you hustle some extra cash inflow? Do you need to sell some extra CSA shares? Do you need to go through the root cellar and hustle some more root crops? Do you need to harvest more arugula and tomatoes so you have more product to sell? So what can you do to increase your cash inflow? And also, what can you do to jigger some of your expenses? Going back to your aging AP summary report, you can look down your list to see what you owe and to whom, and you can decide what do you need to prioritize. So for example, if this is a farm store and you need to have produce in your farm store, otherwise you're not going to have any sales, then you probably need to prioritize what's going to be brought in. Some of your suppliers, if obviously this isn't the $75 here isn't going to be enough to cover that cash shortfall, but if you have suppliers that you can talk with that may be willing to delay a payment or two, if you call them up, they might be willing to work with you. So by going through your cash flow, you can anticipate when you might have a shortfall, and you can start to make preparations for it and figure out what you need to do. The second task we're going to talk about is comparing actuals to projections. And what I call projections are what QuickBooks calls budget. So I know a lot of farmers input their budgets into QuickBooks, so it makes it very easy to run that report. So the tools that you'll need are your cash flow projections, and we talked about that at the beginning of the webinar, that one of the things that you need to get started with your financial management and using this calendar is to have cash flow projections so that you can compare actuals to projections. And then you need your complete sales report for the comparable period and expenses. And when I say comparable period, what I mean is if you're comparing actuals to projections, you want to know, okay, these are my projections for July. What were my sales and expenses for July? So you can get these reports either from Excel or from QuickBooks. And you can see that on the checklist on part 1, this is one of the monthly or quarterly tasks, and it is a managerial task. It's reviewing sales and reviewing expenses to compare projections to actuals. And then you can see task number 5 and 6, they're listed out in detail, the task, what your goal is in doing this task and accomplishing it, what do you need to get the task done, and then what is the process. And in this case, we also talk about a little bit of the analysis. After you've gone through it, what do you need to do to either change procedures, improve sales, reduce expenses, etc. So where do the numbers come from? So obviously, the first thing you need are the cash flow projections, and again, here is that link. The sales report for the period, the easiest thing is to run a QuickBooks profit and loss report, and what you want to do is just make sure that you set the date range for the appropriate date. It can be helpful to export these reports into an Excel spreadsheet where you can easily compare, or if you have entered your budget into QuickBooks, then you can just run the report, compare budget to actuals. Similarly, you're going to want to print out an expense report for the period either from QuickBooks or your Excel spreadsheet. And it does help to print all your expenses as a percentage of sales. And I'll show you what I mean here. So here's an example of a farmer who was comparing their February projections to their budget. And you can see that they exceeded their projections by 14%. Doing 80,000. They also had a projection for their cost of goods sold. So in their budget, they had 54,000, 55,000 in projected expenses. And in actuality, they spent 57,000. Now, if you look at the difference, you might say, oh, they totally overshot their budget by $2,000. Ooh, got to be careful. But if you look at their cost of goods sold as a percentage of sales, you can see that they actually bested their budget. Cost of goods sold are a variable expense. So the more you sell, the more expense you're going to have. So it is reasonable that if they exceed their budget in sales, then they'll likely exceed the raw number in their actuals as well. But if you look at it as a percentage of sales, you can get a better indication of whether the business went over budget or not. So I do recommend that you look at them as a percentage and not just as the raw numbers. And then going through the expenses, you can also look at the differences this way, and you can see actuals going down line by line, the difference between budget and actuals. You can see that the auto repairs are significantly more this month than the farmer budgeted. You want to keep an eye on this. This is a difference of $1,500 or $600 for whatever period this is. So, overspending your budget for $600 isn't necessarily a make or break situation, but it is important to go back to your projections and figure out what adjustments you need to make. Because if you overspent your budget $600 this month, you may or may not have the cash to cover that. Let's say you do have the cash to cover that. The question is, do you mess with yourself for the following month? That if you overspend this month, are you going to be in trouble the next month? Because the next month, maybe you don't have as much cash coming in. So it's important to see where you're over budget and then figure out what adjustments you need to make. So with an auto repair, maybe this is just a once every 6 month or once a year thing, and maybe you misjudged when you're going to need the new brakes or the new transmission, or maybe you've got some bigger concerns with your auto that you need to take care of so that you don't consistently overrun your budget. Finally, we'll talk about an example of an annual task, and we're going to talk about calculating cost of production. And it's an annual task under managerial, number 10. So you can go to the second part of the financial calendar tool. And you can see right here, cost of production, and it's part of a bigger task of reviewing your pricing structure. So in order to review your pricing structure, you need to know your cost of production, and you can't really see it under that red line, but also your competitive analysis. So it's going to be 2 parts, but we're just going to look at one part of that right now, and that's the cost of production. So the goal of this is to understand your true costs and allow you to better price your products for profitability, and also know which products are most profitable so you can focus there. If you don't know what it costs you to raise a cattle or grow a case of tomatoes, then it's going to be hard to know how to price them and make sure that you're earning enough profit. So in order to do this, you'll need a production tracking worksheet, you'll need a labor tracking worksheet, and you'll need a list of your direct expenses. So where do you get all these numbers from? So for your production records, in order to calculate your cost of production, you need to know, well, what did you sell? So, if you sold 100 tomatoes, what was the total cost of, or 100 cases of tomatoes, what was the total cost? You know the cost of a case. If you don't know your production, then it's just sort of a random, elusive number it costs you. So in order to know your production, you need to have sales receipts or invoices from QuickBooks, or if you want to use a tracking spreadsheet, maybe you have a clipboard in the barn where you track everything that comes in from the field, so you know how much you're growing. And I will preface all of this by saying that, tracking your cost of production is a pretty extensive project, and it's not something you necessarily want to be doing with all your crops, and especially if you're a small diversified vegetable grower and you've got 50 to 100 different crops, it's going to be quite onerous to track every single hour that you spend. But certainly your highest grossing products, if your farm focuses on tomatoes and you really want to make sure you're earning a profit on tomatoes. If you're a New England farmer growing kohlrabi, you probably don't have a lot of kohlrabi sales, and if you miss the mark on the cost of production and your pricing for kohlrabi, it's not going to have as big of an impact. So you want to know how much did you produce. You also want to know your time. And I know that a lot of farmers discount their time. It's like, oh, well, I work for free, I'll just take whatever's left over. But it's really an important number to know with your cost of production, because if you're not doing the labor, somebody else is. You know, God forbid you break your leg and you can't work, you have to hire somebody, or as your business grows and you just, the nature of your business, you need to bring in more employees, you need to have factored in their cost into your cost of production. And then obviously you need an expense report to know what you're spending. And we're not going to get into the competitive analysis here, but we do actually have a really good article on how to do a competitive analysis that I'm sure we will be sending out to you. So we wanted the labor and tracking, labor and production tracking, and that was part of the daily tasks. And you can see this was an operational task. So as I mentioned earlier, all of these operational tasks feed into the managerial tasks that you want to accomplish later on. So tracking employees' labor, you'll want to track their hours worked for each task. Again, focusing on, you know, a few specific crops that you want to know. And you want to be recording your revenue on a regular basis, as well, you know, both your cash sales, your credit card sales, and your check sales. So here's an example of calculating the cost of production for a chicken farmer, and I apologize, I left out that this was for egg farmer, rather, chicken layers and meat birds, but this was their egg operation. And they figured out their chores, you know, maintaining the nesting boxes, gathering eggs, etc. You know, they figured out, all right, how long do I spend each week times 52 weeks a year on packaging? How much time do I spend on washing and packaging? How much time each week times 52 weeks per year, the miscellaneous. And then they had all their direct expenses. They had all their labor, and then they had the actual expenses all listed out. So they had a total production of 5,800 dozen eggs, and they had that information from their sales sheet. They tracked their labor, and let's say they bill themselves at $15 an hour. Then they had a total labor expense of $10,980. They had the hard expenses of $14,620 for the total production expense of $25,600. When you divide that by 5,800 dozen eggs, their cost per dozen, their cost of production is $4.35. So this is a great way to think about how you're pricing. And if you're pricing your eggs at $5 a dozen, then you're only going to be making 65 cents per dozen. It's going to be hard to, you know, make a decent living off of that. You know, if you're charging $6, then you're making $1.65, so you have a little more room with that. So this is how you can calculate the cost of production and an example of what to do with the numbers after you figure that out. So that is the overview of the financial calendar, how to use it, both the checklist and the detail of the tasks. We talked about, you know, some of the daily tasks, the weekly and monthly tasks, as well as the annual tasks. So my question for you is if you have any. So we had one question. Would it be much easier to just have an accountant to prepare all these reports for you and track your finances for you, so you can concentrate on just running the farm? Actually, I think it's really hard for an accountant to do this kind of tracking for you. I know a lot of farmers just kind of abdicate, just here, take it. But the accountant isn't going to have the inside knowledge that you do. And so you're really going to need to give the accountant the numbers. They can certainly track it for you, but you need to provide the numbers to them so that they can track it. Another question was, does the Carrot Project have templates for putting a budget together? Yes, we do. It's on our website, and the link is in the presentation, which we'll email to you, and also we can email you the direct link. A lot of questions. Kira, can you help me keep track of which ones I've answered? Okay, so going back to the comparing actual to budget number. So somebody was confused about the comparing actual to budget numbers. So the actual numbers versus the budget. If the actual number was lower than the budget, because these are expenses, I highlighted this in green because going lower than budget seems like a good thing, and highlighted in red the numbers that were positive because you went over the budget. I'm not hearing you, Kira. So somebody asked about how to create a budget in QuickBooks. So in QuickBooks, there is that option to create a budget, and if you go to the reports, you can see that option. It's in different places in the online version versus the desktop version. So somebody asked about the farmer paying himself $15 an hour, and the farmer was only making 60 cents or something. Who cares if the farm is making, if you're already paying yourself $15 an hour? And that's a great question. You know, if you're paying yourself $15 an hour, who cares? Well, the second part of that, one, you're already paying yourself, so that's great. Second, you still need to cover your overhead. So you understand your cost of production. Are you earning more on your eggs than it's costing you to produce them? But you still need to pay for your telephone. You still need to pay your mortgage. You still need to pay the electric and water bills. So while you're earning a profit over your direct expenses, there's other overhead expenses that you need to cover with that gross profit. So
Muted.
know that farmers in this region in New England are paying about $12 an hour. That's about
Unmuted.
pretty standard. So I set it at $15 an hour to account for payroll taxes. So you know, depending on the size of your farm, and if you need to be paying payroll taxes, you might need to mark it up a little bit.
Hi, Julia. This is Kira. Can you hear me now?
Oh, there you are. Yes.
All right. I called back. Yeah, hung up and called back in again. Hi.
Great.
So we had one other question from Ray about the numbers being low, I think in particular about cash flow, saying if you're going to start a business, don't you need to make sure that you have a larger amount of cash saved up for living expenses and projected business expenses so that you're prepared for shortfalls?
Oh, absolutely. You need to be prepared for shortfalls. But you know, the truth of the matter is that things don't always go as planned. So it's, you know, especially in May, if you're a vegetable grower in New England and May, you're still, you know, you've just come off like the hemorrhage cash season, you know, buying seeds and soil amendments and, you know, all the supplies you need to get the crops in the ground, and you still have 60 days before you start earning any money. So you need to, you know, be careful. It's, you know, a lot of times farmers will put together projections and they say, oh, well, on the year, on the whole, I'm going to make it. But, you know, there's a seasonal flow, seasonal fluctuations to cash. So you really need to keep an eye on it. And yes, I recommend having a buffer, but it doesn't always work out that way. Hopefully that answered your question.
Thank you. And we had a question too from Abby about, can you talk a little about creating a budget in QuickBooks?
Yes. So QuickBooks has the function to create, you don't really create the budget in QuickBooks. I recommend that you create your budget in Excel because to create the budget, it really helps to look at your historical numbers to see what you want to do going forward. And it gives you a baseline to move forward. So I would say create your budget in Excel, but then you can transfer the budget into QuickBooks. So it makes it a little bit easier to track your projections to actuals if you have it entered into QuickBooks, because you can just run that report.
Okay, thank you. I think that's all of the questions from the chat window, unless I've missed one. So if you have another question.
Like yep. How do you determine what expenses are included in overhead? How do you allocate overhead to products sold? So I consider overhead expenses that aren't directly related to production. So there's also, production expenses that are hard to allocate to a specific product. So, if you've got a tractor, how does the tractor expense get allocated to your vegetable production versus your livestock production? It can be really difficult to allocate. So number one, you want to know what your overhead expenses are, and then to allocate them to the different products that you sell. There are different ways that you can allocate. So you can say, well, I had $5,000 in revenue from this sales channel or this product, and I had $10,000 in revenue from that product. So 30% will go here and 60% will go there. So you can allocate as a percentage of revenue. You can also allocate based on a percentage of acreage. So one farm I worked with had 10 acres in production, and 2 acres were flowers, and 8 acres were vegetables. So 20% of overhead was allocated to flowers, and 80% was allocated to vegetables. So if you were to target a buffer, would 3 or 6 months be a reasonable amount to have saved against shortfalls? So the shortfalls that businesses have is, there's a couple of ways to think about it. First of all, when you're launching a new business, it's going to be, 6 months before you're cash flow positive. So whatever budget you create, you need to have savings to cover yourself for 6 months until the business starts generating revenue and cash. On the other side of that is that, once you're a going concern, once you're already in business, you need to think that, what is your cash cycle? So, if your sales drop off in November, when the fields start to frost and you have no sales between November and May, then you need to figure out, what do I need between November and May to cover my operating expenses, my startup expenses for the season, as well as what do I need to cover my living expenses. I still need to pay my rent, I still need to eat, I still need to pay for the electric bill, etc. So, I would say 6 months is reasonable, but you also need to recognize you're counting your personal expenses, what you need to cover, as well as your business expenses. Any other questions?
Okay, thanks everyone.
Thank you. Just so you know that the farmer_resources business _and _financial _planning is where you can find all those budget tools, as well as on my website, thefarmersoffice.com.
Yeah.
So thank you all very, very much.
Yeah, thank you for being here. We'll also send out an email after this to all the registered participants with a link to the slides and some of the things that Julia's been talking about, in case you missed anything or feel like going back for more.
Thank you.
Thanks, everyone.